the top 11 ways to achieve financial independence. So before we dive in, I'd like to give you my definition of what financial independence is. Essentially, what it is you're able to do what you want when you want, and the income you're taking in is meeting and exceeding your living expenses. So it's meeting your needs, and you get to still enjoy your hobbies in life. Now, with that in mind, there's a lot of people are driving towards this, but the question is, what direction should I take? Now, over my 20 years of business experience, I've tried a lot of different business models. I've also talked to a lot of different people. I built and went through a merger with an agency. I also had quite a few failures with different tech startups. And then I also worked for a few large corporations, including a few public companies like GE. So over 20 years, I definitely gathered a lot of intel on what to do and what not to do. And I also have a podcast, Payback Time, which I love interviewing people to hear their stories on how they build businesses. I also talk to people, how do they build wealth, and also talk about financial independence. So I have some really cool stories and some information I've taken away from that podcast as well. So essentially, I've kind of funneled everything I've learned over 20 years into 11. It's not 10, and I'll go over some other options out there that you probably shouldn't consider. But the list I came up with really came out to 11 strategies. So with that in mind, let's dive in. And what we're going to do is we're going to start with probably the hardest and work our way up to the easiest. And I'll actually give you some realistic timelines in each and some of the challenges you may face along the way. So let's dive in. So starting with number 11, we have Amazon FBA, Fulfillment by Amazon. So the timeline for this model can take about 2 to 3 years, depending on what your income is to replace your job. You should set expectations. It can probably take 2 to 3 years, and that's at best. And I'll go over to the challenges here in a second. So when you start this business model, and I've had a few people on the podcast that they have done this, but it's very difficult. What you need to do is you need to find top selling products on Amazon. Then you need to figure out, okay, how can I not create, but find a competitive product, typically from China or some other country that can manufacture at a really low cost? Then you got to figure out the copy, the text, the graphics, take care of all that. Then you got to figure out how is it manufactured, who's manufacturing it. You got to do a lot of due diligence, and this can take upwards of a year. And then you're going to launch with that product. And what I find is a lot of these people are going to try various products. And in most cases, you're going to fail. You're going to probably be swinging for the fence, using a baseball analogy here. You're going to swing for the fence, probably strike out a few times. But sometimes you'll land on a product that really sticks. You're getting a lot of sales, and that's creating passive income. The problem is that most of these people I've talked to are earning about 7 to 10% margin. If you Google this, and I have, it will say higher. I've seen upwards of 25%, but I take it right from the source of people who have actually done this. They said it's actually a lot lower than what you can find online. So 7 to 10%. So that tells us if you sell $100,000 worth of some product or widget, whatever it is, you're taking about 7,000 to 10,000 and pocketing that. That means if you want to make 100,000 a year, you should be selling $1 million of product. I know there's a few Amazon FBA people out there that may agree, some may disagree, but this is just coming from the source of people I've talked to. So that's number 11. That is an option. It can take 2 to 3 years, but it is hard. So let's keep moving. Number 10. That would be a SaaS business. Timeline, the realistic timeline is 3 to 5 years. This is what Tykr is, software as a service. It's considered a B2C. There are really 3 categories of SaaS, and I'll deep dive SaaS in a different video, but you have B2C, business to consumer. Typically, you want to arrive at a price point of $50 a month or less. As soon as you go above $50, most people kind of fall off and they're not going to spend that kind of money. Then you have B2B, SMB, which stands for small and mid-sized business. In most cases, statistically, especially based on my experience, you want to arrive between $100 and $300 a month. As soon as you go north of 300, small businesses are going to fall off. They're not going to be spending that kind of money. And then you have B2B enterprise. And that's when you deal with some really big bucks. You can be charging $10,000 a month, $100,000 a month. And some of the customers and businesses I've dealt with are paying over $1 million a year. But keep in mind the sales cycle at the enterprise level, it's really long. It's not like somebody's going to see your product and buy today. You have to go through, you're building relationships, you're doing proposals, sometimes an RFP project where you're competing against other businesses. And I've been in these sales cycles that have gone sometimes 6 months, 9 months, and sometimes over 12 months. But if you secure the deal, it's highly, highly lucrative. Good business to get into, but starting it, you have to create a software. You have to have some solid business experience to pursue this type of business model. But if you know what you're doing with online business and SaaS, you know how to market to your specific audience, whether it's your consumers, customers, or SMBs or enterprise, you should definitely have a lot of experience in that area before pursuing this, and be ready to spend some money in the software build up front. It can take a little time. So that's why you set the expectations about 3 to 5 years to get something out there that's you find product market fit. People are buying from you, they're sharing it with others, and then you create some residual, some reoccurring, I should say more reoccurring cash flow, and then think about achieving financial independence in that way. Quit your job and get to do what you want to do. Fortunately, that's where I arrived with Tykr. Full transparency, it took about 3.5 years. First version, I'll keep it short. First version MVP took a year to build. Then iterating upon that, getting tons of feedback. It was not an easy road. So I kept my day job. Did not pay myself, my team as well, or at least partners, they did not pay themselves as well. We just kept our full-time jobs. But that would be number 10. Okay, number 9 would be affiliate marketing. Timeline would be 1 to 2 years. But the catch is you should already have an audience. If you're on YouTube, if you're on let's say if you got a blog, maybe you're on Instagram. We'll talk about some of these other platforms in a minute. But if you already have a solid audience in place, then what you want to do is go to other businesses that have products in your category, in your industry, and then you promote their products and you receive a commission. Ideally, it's really nice to promote SaaS businesses because you should be sharing with them every month. The reoccurring revenue is a great place to be. Like, for example, with Tykr, affiliates are a great way we drive growth, and we actually give a percentage of every sale every month to our affiliates. We want them locked in with us for the long term. So that's really cool when I see other SaaS businesses doing the same thing. But 1 to 2 years to really get some solid revenue stream. But again, you should already have an audience. Now, speaking of audiences, we're going to go over the next ones. So we've got number 8 would be Instagram. Expectations there, 2 to 3 years. You should be passionate about a specific industry and do consistent posts on that. Whether you see a lot of people out there doing, let's say, fitness products, or whatever product they're pushing, whether it's a workout program, maybe a supplement. You also have health and beauty, tech reviews. The list goes on, but you should be posting pretty much every day. It is a ton of work, and it can take a lot of time. You see a lot of kids out there, their aspiring career. I think I was reading something, it's no longer actors or actresses or athletes. It's now influencers. But set expectations. You have to be consistent, and you have to do this day in and day out for a long time. That's why I put 2 to 3 years. Some of the people I talk to, that you can create some income that can replace your job. Okay, moving on to blog. Timeline is about 2 to 3 years, and you have to create a lot of content. You have to be good at SEO. You have to be consistent. Same thing with the Instagram strategy. Find a specific industry and focus on that. I've seen blogs that do very well that are just focused on, like, let's say snowboarding or golf or mountain biking or whatever, but it's years of posting content, being consistent about it, being really good at SEO. And then what you do is you monetize with affiliates. You have little ads on your site, like affiliate links, and you can also use like Google AdWords, but that's how you monetize your blog. Again, 2 to 3 years to achieve that. Okay, number 6 would be YouTube. Video is stronger than written text, as well as Instagram posts. Most people love consuming video over the other content platforms. So YouTube would be number 6 in this case. Blog would be 7, Instagram would be 8. So number 6, Again, 2 to 3 years in this case. You have to be consistent with your posting several times a week. And again, find a specific industry. But in this case, it's very similar. It's affiliate marketing where you want to put your links in your show notes, or sometimes you're doing reviews of products right there in your video and really driving that excitement and that urgency for other people to buy those products. But that's one way you make money. The other way is YouTube will pay you directly depending on how many clicks and subscribers you have. I typically recommend don't rely on that because algorithms of YouTube can change. What you want to do is rely more on your affiliates. Even better if you have your own product. But again, 2 to 3 years for YouTube. Okay, moving on to e-commerce. This is a little shorter timeline, 1 to 2 years. And you need to figure out, in this case, a product that you're going to make. That's a big part of the process is what is a product? You have to create a prototype. Then after you create your prototype, you prove product market fit. And if people like it, then you got to figure out, okay, how do you scale the manufacturing? So if it's manufactured in your country or maybe overseas, you want to think about a process on how it's manufactured and shipped to the customer. Ideally, you do not want to be shipping to your living room, packaging products and sending them out to customers. I see people start e-commerce like that. That's not a smart play. You want to be thinking big, and maybe you do that in the beginning for a few months, but think long term. You got to think scalability in this case. Now, when it comes to your site, don't even think about building this with like WordPress or building this on your own. Just go to like Shopify, Squarespace, or Wix and get an e-commerce site set up. They've got everything ready to go for you. You don't have to do any beta testing or very minimal testing. You add your text, add your graphics, and you're off and running. And it doesn't have to be perfect because in e-commerce, keep this in mind, people are not shopping for the site, they're shopping for the product. Think about this. Amazon does not have the prettiest site out there. I think we can all agree. People don't care about the website design of Amazon. Or even another big player out there would be Target. Even Walmart does a good job. They don't have pretty sites because nobody cares about the site design. They care about the product they're going to get sent to their home. So that's where your focus should be, really, in the product. But again, Shopify, Squarespace, or Wix, you can be off and running. So that's why 1 to 2 years you can get moving with something like that. It's just a challenge of finding some kind of product that has product market fit, physical product. Think about what I tell people is think about your hobbies. Like in my case, I really enjoy mountain biking. I love golf. There's all kinds of widgets and tools and toys, you could say, that can cost between like $20 and $50. And what I found is that price point tends to move a lot easier than when you start moving products that are like $100, $200 and up. So, all right, that was number 5. Let's move on to number 4, real estate. So I've had a lot of real estate investors on payback time. And this is a super popular strategy. I mean, we can all agree the world population is growing faster than ever. We just crossed 8 billion people. The problem is in the world right now, we're running out of homes. We can't build homes fast enough, which means if you become a landlord, you're going to be making passive income. It's a great strategy. It's sound. It's been working for hundreds of years, thousands of years probably. So with real estate, realistic expectations to replace your job income, again, depending on what you earn and how much you want to earn with a business like this, it can be 3 to 10 years. And let's just break that down a little bit. So getting started, a lot of people start with, they want to be the landlord or start with a single property. Let's say they buy a home here in the United States, let's say a $200,000 home. Most cases, you should be putting down 20%. So there's $40,000 you have to put down. And then you're charging rent. Let's say rent is $1,200, but then you got a mortgage and insurance and other maintenance against that. You might be netting maybe half that or less per month. Okay, so you do the math. Let's say $1,200 you charge, but you're making $600. I'm just going to use round numbers, $600. To get $6,000 a month, you need 10 homes. And that's not going to be like 1 year or 2 years. That can take a long time. Now, that's one strategy I see people doing. There are other strategies you can do at the smaller real estate level. Almost every real estate investor I've had on payback time has actually graduated away from this model and moved to larger syndications. What that means is It's all about getting involved with large rental complexes with 100 units, 200 units, 500 units, sometimes 1,000 units in well-established areas. In this case, you do require bigger chunks of change down. For example, some of the minimums I've talked about are like $50,000, $100,000, sometimes more. But what they're doing is not guaranteeing, but there's a high probability you're getting paid 10% residual, every year. So in that case, you put in $100,000, you're getting paid $10,000 a year. I know it's not a lot, but when you start putting in $1 million, then you're getting, $100,000. You're getting paid that. That's awesome. That's where you want to be. And then there's also, in some cases, some of these large complexes are built to run like 3 years, and then they're sold to a much larger conglomerate for a much bigger price. So you're not only making the monthly residuals, you're also getting the big bang payout when the property sells for maybe 2 to 3x its value. That's another nice payday to think about. So that's just high level at real estate. There's a ton of different strategies. I've talked to a lot of people about that. This segment, you could say, or this strategy, real estate is a great place to be. It's tried and true. Again, it's been a great strategy for people to build wealth, over hundreds of years. Okay, moving on to number 3, this would be courses. So with courses, you don't have to manufacture any type of product. Like you don't have to create a physical product. You really don't have to create a large business with a lot of employees. You could literally do this yourself. Timeline to create some solid income would be 2 to 3 years. The challenge is you need to create the content. You need to be creating videos, or maybe you're doing online books or something like that. But what you should do is think about what is something out there people want to learn. And these days, people don't want to learn something over the duration of years anymore. We've all become impatient. It's just the way the world has gone. So they want to learn as fast as possible. How can you get people from A to Z in as little time as possible? And do you know something that people are looking for? So maybe it's a certain hobby you're into. I know I'm always watching golf videos trying to improve my game. I haven't taken any courses, but I know there's courses out there that could probably reduce my golf score, which would be great. But again, think about what you know more than other people and start talking to people. Just get a pulse on where the market is. If this is in demand, like, hey, I see you're having trouble with that. What if I showed you how to do this, this, and this? Would you pay for something like that? You have those conversations. And you want to be doing Zoom videos, lots of surveys, really prove that there's demand. Then you want to work with those same people that you talk to help build the course or courses. So find out, what do you want to learn most? What are your biggest pain points? And you start writing those down and then create videos against those. So I put 2 to 3 years. Realistically, you can start to build some solid income in that case. But again, the challenge with this model is you need to be creating the content. So probably touch up on your video skills. If you need an editor, you can go to Upwork. Otherwise, you're going to be editing yourself. And then as far as hosting the product, you don't want to do this on WordPress or build some kind of custom product. You want to just use a platform like what we use. We use Teachable. There's also Kajabi, Podia, dozens of other LMS, learning management systems out there. You would pay a subscription fee to use those, but they're up and running. You don't have to really beta test anything. Get your videos, get your content good to go, and you're off and running. So that's a solid way to go if you want to create financial independence. Okay, number 2, believe it or not, consulting. So I've had a few people on the podcast that actually have created incredible work-life balance, pretty much achieved financial independence by creating consulting companies. And when I say consulting, this is a large umbrella. This would be a service business. And I'll give you a few examples. Let's say you're a marketing consultant. You're creating Facebook ads, maybe YouTube ads, maybe Google ads for businesses. Maybe a social media marketing agency, maybe a podcast marketing agency. There's also, I would also put videographers into this category, providing some kind of service. But whatever you do, think about how you can provide an ongoing service on a monthly basis, because you want to structure your model not based on project fees. I learned this lesson with my agency, had between 2006 and 2010. We were doing projects which was a pain in the butt. You get a new customer, you get a down payment, you finish the project, get a final payment, customer goes away, you're not making any reoccurring revenue. The people that have become successful with building consulting companies or agencies or some kind of service business structure their service so it's monthly. And you don't want to lock your customers into a contract. You just want to say this. You want to be like, hey, I'm going to provide value month to month, and you can work with me as long as you want until you're no longer happy and just part ways. That creates really low friction, allows people to work with you. But if you can provide a service, like for example, some of the agencies that I've talked to that do this correctly, they're charging minimum of like $500 to $1,000 a month. And then upwards, depending on the type of customer you're working with, upwards of like $10,000, $15,000, $20,000 a month. But let's say you wanted to quit your job and do this, you could be up and running in 6 to 12 months. You should be good at networking, like meeting new people. You can get out there on social media, but you want to think about what type of service you want to provide and then start talking to customers. And the easiest way to really get started is you want to maybe provide your services pro bono to 1, 2, or 3 customers for maybe 1, 2, or 3 months, get some results, and more importantly, get some testimonials, because when you go to sell other customers, you want to leverage the data, what kind of results you generated, and the testimonial. I can't emphasize this more, but in this day and age, we do not like being sold to. If we are going to buy something, we want to see what value we're getting and see what the customers are saying. That's pretty much how everybody shops on Amazon. So if anybody's forcing a sale at you, run the other way. I actually, when somebody's trying to force me a sale, I cut them off, let them know what I'm looking for. I want to see the data. When your customers are saying, that's it, don't waste my time. So in this case, do the same thing. So if you have good data, what kind of results you're generating, and good testimonials, you should be able to build this business pretty easily. I know I was able to. I did consulting on the side with some of the corporate contracts I was doing, and it was actually pretty easy. I even considered it a few times, like quitting my corporate contracting jobs and just being a full-time consultant. But there are numerous reasons I wanted to just keep the full-time job. Okay, so that was number 2. Consulting is a great way to go. And with consulting, yes, it's a service business, so it's not completely passive income. And all these revenue streams I talked about and models, they're not completely passive. With consulting, what you do is you're going to do this yourself, but you want to start offloading some of the heavy lifting to freelancers. And a great place to go for that is Upwork. So just go to upwork.com. I've leveraged really talented people from all over the world. And that way, some of the heavier lifting stuff, maybe there's stuff you don't want to do with your model, you can have other people help you out there. It's a great place to be. And I know people like this that are consultants. They're really just doing the sales, building relationships, talking to people. But the heavy lifting, the work is done by some contractors from Upwork. With that, I know people to create, a $10,000 in income per month, but they're working like maybe 20 hours a week. That's pretty solid work-life balance. So after consulting, the number one easiest strategy to achieve financial independence is actually stock investing. That's what Tykr is all about. That's what I'm all about. And fortunately, anybody can do this. And here's why. So you can get up to speed and do very well in the market in about 4 weeks. 1 to 4, we kind of set expectations. But if you're using a platform like Tykr to help find good stocks, stay away from bad stocks, and teach you how to invest along the way, you can be really effective in the stock market. We also have Tykr EDU with courses if you really want to do a deep dive. All you need is a laptop and a smartphone, so you don't really need any technology or large investments. You need an internet connection, that's pretty obvious, or of course Wi-Fi. You need a broker. I use TD Ameritrade. There's brokers all over the world. We actually, if you go to Tykr.com and in the little search bar in the upper right, if you were to search brokers, we actually have a list of the most popular brokers from all around the world. We got some feedback from our customers based on where they're at and what they use. We've got customers in over 50 countries. So they let us know like, hey, here's a good broker, and the list goes on. But and most of these brokers, fortunately, they are free or low fee. So to buy or sell a stock, you're paying nothing or next to nothing. Another key factor here that's pretty easy is you need a steady paycheck. If you have a job, that's great. We like people to have a steady paycheck. That's the best way to go. If you have a business that's creating reoccurring income, that's also great as well. Steady paycheck is key. And this is actually the lowest effort out of all the 11 I listed. When I first discovered stock investing and really got into it heavily in 2015 and 16, I was like, why? It frustrated me because I was like, why didn't I start doing this when I was like 18? I was just kicking myself. Because once you know what to look for, what to avoid, you're literally letting these businesses you invest in, they're the ones doing the hard work. You're just sitting by and letting compound interest work for you. It's brilliant. And then expectations on this is about 5 to 10 years. So, like real estate, it can be a little longer, but it's tried and true. You're investing in strong companies, good financials. And with that, again, it's not going to be in one day or 1 month or 1 year, you're really building your wealth. It's that consistent returns over time. That's where you truly build wealth. So, speaking of compound interest, I put together a little model here to show you the comparisons between low percentages and higher percentages and what that looks like. So with this example, we're going to use a salary of $50,000 a year. I use this number because I did a Google search as of early 2023. What is the average salary in the United States? Is just over 50,000. Annual contribution should be 15%. We tell our customers at Tykr, try to invest 15% of every paycheck. Don't do 15% once per year. You want to be constantly going into the market, at least once a month, ideally every paycheck. And the starting amount would be $5,000. So let's break this down a little bit. We're going to be comparing a percentage and then looking at what does that look like over 10 years, 20 years, and 30 years. So starting with 1% annual return, which is, I'm using 1% here just as a nice even number, but it's pretty much representing your savings account. My bank at JP Morgan Chase, it's a good bank. I've been using them for years, but like any banks, their savings accounts are like, maybe point something percent, whatever it is. But you're not putting money into your savings to build wealth. It's just there for like an emergency fund. Most of the money I have is kept in my broker because it's building upon itself because of compound interest. So over 10 years, what does 1% look like? It's 83,000. 20 years, it's 171,000, and over 30 years, it's 267. So you got to go a long time just socking money away to build up some kind of account, and most people won't be able to retire off of 267,000. All right, so let's dial this up a little bit. We'll go to 8%. This is kind of like investing in the S&P 500. This is about the average return you would get over the last 20 years. So in 10 years, what would that look like? Again, same salary, annual contribution, and starting amount. That would be 119,000 after 10 years, 366,000 after 20 years, and 899,000 after 30 years. So if you're somebody who is committed to working well into your 60s and even 70s, maybe it's a job you don't like, set expectations. If you're putting your money into index funds, ETFs, or mutual funds, you're getting about market average. You're going to be in this the long haul. But again, set expectations. All right, now let's take things up a notch. We're going to 15%. This is based off the teachings of Phil Town and what we teach at Tykr. You should be aiming for 15% more a year. My returns are closer to 50% per year over the last 7 or 8 years. And I will tell you this, it's not that difficult. It's all about investing in individual businesses, Warren Buffett style. These are businesses, again, that have strong financials. They're good business models, and they're stacked up nicely against the competition. There's a competitive advantage, and then they are led by good CEOs, good leaders that have a winning track record. So with 15%, let's look at these numbers here. So over 10 years, what does that look like? It's 172,000. Over 20 years, it's 850,000. And then over 30 years, 3.5 million. So we're looking a lot better in that case. Even after 20 years, you've got close to $1 million. Now let's take things up a little more. We'll go to 25%. So in 10 years, that'd be 295,000. 20 years, 3 million. And 30 years, 28 million. Now, are you going to make 25% every single year? Probably not. In my case, I'll have a year that I'll make 15%, and the next year like 80%. So it can be these big swings. But this gives you an idea. If you're just making average salary and putting away 15%, when you're getting an annual return of 15% or more, your investments are working for you. And I'll give you some quick case studies here. So I've had a guy on that invested in Ford back in the recession in 2008, 2009. He took $100,000 and turned it into close to 2.5 million. This is a strategy called stockpiling, which we teach at Tykr, which is all about when everybody's fearful, you want to be greedy. You want to be buying stocks when everybody's selling theirs. You want to sell at the bottom. The catch is you want to be buying, again, strong businesses, strong income statement, cash flow statement, and balance sheet. So this individual had the intuition because guess what? GM and Chrysler took a bailout, whereas Ford did not. What does that tell you? Their balance sheet is stronger than everybody else's. And he took a closer look at the numbers. He was indeed correct. And he took a little bit of a risk. He says, 100 grand into one stock is like, it's not always advised, but he went for it and it paid off big. So he achieved financial independence, I think, in his early 30s. Another great testimonial is a guy that I had the podcast, took about 10 years, but he bought one stock, Travelers Insurance. And he knew that insurance is a requirement, especially in the United States. Homeowners insurance is required in, I think it's 48 or 49 states, and if not all 50 states. But then auto insurance, same thing. It is mandatory in most states, at least. So it's a mandatory product, and it's a reoccurring revenue product. So customers are either paying every month, every 6 months, or every year. That's a great business model. And he just compounded money into that one stock. And within 10 years, he had over $1 million. Again, Warren Buffett style, buying single businesses. And then one of my favorite testimonials is a guy by the name of Ronald Reed. You could Google him, but he was a janitor that actually built up a wealth of, I think it was $7 or $8 million. And with that, the question is, how do you do that with a janitor's income? Simple. He was buying individual stocks. And this was like through the 70s, 80s, 90s. He was buying, I think, and this is not financial advice on these stocks because they're not as strong these days, but I think it was Johnson & Johnson, GE, a lot of these large industrial businesses. But he wasn't buying these index funds, mutual funds, and ETFs. It was, again, individual stocks, strong businesses, and you keep putting every paycheck in, and this is something we can all do. So that's why stock investing is the number one way to achieve financial independence. Hopefully this video gives you good context. It's a little longer than some of the other videos I planned on making, but I knew I needed to share it because some of the trials and tribulations I went through with businesses I tried, and there's people I've talked to, and some of the results I've seen over the years. All right, that's all I have to say on financial independence for now. We'll talk to you soon. See ya.